Welcome to our webinar, IRS Debt Resolution. My name is Fulton Abraham Sanchez. I am a CPA. Our firm, FIS CPA and Consultants, has created this webinar series with the objective of helping you to resolve your IRS tax debt. In this webinar, we're going to deal with the IRS offers in compromise. There is a lot of talking about this form. We always read on the newspaper or listen to the news or to the commercial advertising on the radio that you can pay your debt for pennies of the full amount you owe. And we want in this webinar to tell you exactly when you are able to apply for an offer in compromise that will allow you to reduce your the amount of the debt that you have with the IRS. There is many concepts about this form, about this offer in compromise that you can apply, that apply just in case, that everyone is qualified, that the IRS is going to forgive you your debt, and all that is false. The only way that you are able to apply to an offer in compromise is if you are broke, if you are in an economic calamity, you have lost your job, or if you earn so little money that after all your expenses are deducted, you don't have enough to pay to the IRS. Those are the only conditions. You cannot apply to this offer in compromise if there is a substantial income or you have enough income to pay to the IRS. So aside to all this wording and verbatim that we read on the news, in the newspapers, or we listen to when we watch TV or to the radio news or to the radio, there is very strict criteria that you have to fulfill, you have to go through in order to qualify for. And even before considering apply for a offer in compromise, it will be very productive before knowing the amount that you owe. There is a website that the IRS has provided with the objective of you qualify for the offer in compromise. There is an offer in compromise pre-qualifier. This is a very long form. You just type offer in compromise pre-qualifier and it will appear first line in the Google. Offer in compromise pre-qualifier, and you have to go through these criteria. There is some basic steps and they cover your information, your assets, your income, your expenses, and finally the proposal that after all this information the IRS is going to accept. The IRS is the table that you are entering information is going to provide you with the objective of qualifying you. This pre-qualifier will tell you that you are qualified or disqualified because of the data that you have entered. But remember, this must be real data. So once you have go through all this information, through all this data, the IRS, the pre-qualifier is going to tell you, yes, you qualify, and then is when you are ready to start preparing the forms that the IRS require for the presentation of the offer. The presentation of the offer by itself is divided into two elements. The first one is the form 433A, where you is going to collect the information. That's one, 433A. And also the offering compromise by itself. The offering compromise is another form, and that form needs to be filled in. It's form 565. You need to provide these two forms with the objective of certifying or requesting your application for the offering compromise. So there are two forms. The first form that we are going to deal with, and by the way, this form 433A is the same information that you are going to find in the qualifier. It's exactly the same. Status, basic information, assets, income, expenses, and the proposal. This is exactly the same form 433A that we are going to cover in this webinar. Now, before beginning this, before considering all this information, there is some steps that you have to go through. The first one is there is a complete package. There is a package that you need to complete. It's not only the form by themselves. By the way, if you want to get the forms online, you just go here and you type offer, just the offering compromise form, and they're gonna give you the form. You have to look for the one from the IRS, offering compromise. Do not go through any. It's offering compromise, the one from the IRS. And then once you get that, this is the full form. The offering compromise. This is a booklet. But remember, this is a form that is composed of three forms. The two forms that we just reviewed, 433 and 565, and one additional form, 433B, for companies. We are not going to cover companies in this webinar. This is for now only for individuals. We'll cover companies in a future webinar, but for this is only this offering compromise booklet, the one that you will need to present your offering compromise to the IRS, is composed of, for individuals, is composed of two. It is composed, as we will see here, at the top is, the form is the 433 form, the collection information statement, and the form 656. Those are the two forms, and in addition there is another form, 433B, for businesses, but we're not going to cover that. So you're going to need two forms, form 433B, offering compromise, that is the collection statement, and you also need form 565. Those forms are here in this PDF form. They're all that. Okay, so we're gonna review first what is what you need to complete the package. First, you need to gather all the information. This requires that with the objective of producing an offering compromise, you need to know what is the amount that you owe. One. And second, how many years or what is the debt that you have for each year. If you have multiple years, as is the case, we have seen cases for clients that they have multiple years, it is required that you find out the amount that you owe per year. Now, that information, the most accurate information, if you have no idea how much you owe, you need something that is called, you need to request this to the IRS, is an account transcript. This is what you need. This is before starting your offer in compromise, you need an account transcript. You need that. In addition to this account transcript, you also need to file all your tax return. Even if you owe and you have no money to pay, you have to file them all. All the tax return file, all the, if you are able to pay, it means that some of the years perhaps you will not apply for an offer in compromise. But if that is not the case and you have no money to pay, you have to file all your tax return. Once you file all your tax return, you will be ready to apply for an offer in compromise. That is the requirement. You must file all your tax return. Now, if you have no idea, if you don't know what form you have and you have not filed for multiple years, there is a solution for that. We have a webinar where you can review the information, how to request your IRS wage and income statement. And also, if you have no copies of your tax return previous years, there's also a form that is called return transcript. So there are basically 3 forms that you can require or request from the IRS. For this particular purpose, if you don't have an idea of the amount that you owe per year, you need to request an account transcript. How do you request an account transcript? Unfortunately, the account transcript does not come neither online nor through the IRS website. You cannot request by the phone or online. You cannot request. For example, there is an automated system that you call to the IRS and then by the phone you request a wage and income transcript, and you request also a copy of your tax return transcript. But in this case, to know the amount that you owe to the IRS, for example, in this particular case is $7,585. The only way to know what is the account balance of your debt, what is the account balance of the debt, $7,585 in this case, is with the accounts transcript. How do you request this accounts transcript? Is by phone. The easiest way is to contact the IRS. The number is 1-800-829-3903, 1-800-829-3903, and you are going to request to the IRS. Whenever the IRS system answers, do not select any option. Just wait till they you are automatically queued to the next operator, and they will give you information about what is your request. Now, there are 3 questions that you need to request to the IRS, but these questions are strictly depending on what you need. If you already filed all your tax return and you have copy of all your tax returns, then question number 1, where you need a wage and income transcripts, do not apply. Question number 2, where you need the return transcript, doesn't apply either. It is only if you have, and question number 3, send me the accounts transcript for each of the years that you have an amount that you owe to the IRS. But this is something that you need to tell the officer. So even before requesting your account transcript, you need to know what years you owe to the IRS. What years you owe to the IRS. Once you find that, the only way to find this out, how much you owe, is filing all your tax return. You need to file all your tax return. If there is any amount, any year that has not been filed, there is no way to determine the amount of money that you owe to the IRS. So even before considering an offer in compromise, the basic, the starting point for dealing with the IRS is filing all your tax return. Now, if you have no idea what is the information for that, if you don't know what format, you have multiple years that you have not filed, you need to determine what are those years that you have not filed, and once you have that information, you can request something that is called the wage and income transcript. We did another webinar where we showed to the taxpayer how to request the income transcript and how to read this wage and income transcript, because the income transcript, wage and income transcript is basically the summary of all the forms, W-2, 1099s, 1099K, all the forms, 1099G, all the forms that you receive for income. And with that, you will be able to file your tax return. In the case of the number two, the transcript, this is only return transcript. This is only if you don't have your tax return. This is just a copy line by line. We recently did another webinar with this same topic, how to request a transcript, the return transcript, and how to read them, and we review line by line with information. And that is for the IRS forms, in terms of the information that you need to know with the objective of starting or planning your strategy for pursuing your solution with of your debt with the IRS. So check our webinars for the rest of the rest of the information that you will need to, in case that you have not filed your tax return, for example. We cannot cover that in this webinar because it is a little longer than we were expecting. But check the information that you have. It will be in our webinar. Check the information. It will be very useful in case that you need to file your tax return, or you need to find out how to read the wage and income transcript. That's also useful in that webinar. For example, once you have requested all this information from the IRS and you have filed your tax return, you are in account, all the information is entered in the account with the IRS, is determined. Even if you owe X amount of money, it doesn't matter. You have filed your tax return. The reason that this is a need, because at the end of the form of the offering compromise, the IRS requires that you sign under penalty of perjury that all the forms from the IRS have been filed. All the forms required for every year have been filed. You have no amount, you have no tax return that has not been filed. So it's critical that you file all your tax return. It is only after filing your tax return and knowing all the amounts that you owe you are ready for an offering compromise. So once you file all your tax return, requesting you are going to request your account transcript. The account transcript is just what is going to tell you the amount that you owe. Once you have that, we are going to come back to the actual form. In the form, the offering compromise form, page number 7, is going to tell you how you have to do your package, what information you need to provide. You need to gather all the information for the calculation of your income and your expenses. So you need all the forms, 1099, W-2s, the bank statements. You need all that information to prepare your offering compromise form. You also need the utilities, your insurance, groceries, all the expenses that you have, because this is you need to provide with the exact amounts. Second, you need to fill in Form 433. This is the collection of the information. This is where you are going to use all the income and expenses that were required in step number 1. Step number 1 is gathering all the information. Step number 2 is using all that information that you will have. We're going to cover all that in detail. Step number 4, because step number 3 is for businesses. Step number 4 is the attachment of all required information. These are copies of all the information that you are going to provide within this form, including 3 months of bank statement. That's how the IRS will find if you have in fact a qualification or opportunity to qualify for the offering compromise, because your bank statements don't lie. And finally, you need to provide also fill in the form. This is the approval, or in this case, that you are the application for the offering compromise, $205 for the application fee if you do not qualify for the exemption. We'll show you when you qualify for the exemption. There is a maximum amount of income that you have, and depending on the number of people in your household. And finally, there is an address provided that the IRS, you need to mail the application to the IRS. This step number 7 needs to be done with a certified mail. Now, we keep going. Page number 9 is the collection of information. What do you need to do? Remember, you need all the information from your income, pay stubs, W-2s, 1099s, and all the expenses, your groceries, your utilities, utilities, insurance, all the expenses that you pay, your car, your mortgage, your credit card, all that information. And this document, Form 433A, that is part of the offering compromise, is divided in sections. Section number 1 is basically the personal and household information. Here you need to provide with the names, date of birth, and social security number, in addition to the address of your home, and if you rent or you own your home. If you are married, or the county of residence, the primary fund. If you're married, you need to provide the name of your spouse, the date of birth, and the social security number. And if you have a dependent, you need also to provide the dependent. And for example here, claim as a dependent on Form 40, yes, and that she contributes to household income, obviously no, because she is a minor. If you have an adult dependent and he or she contributes to the household, you need to put that, because remember that is going to be seen on your tax return. But generally, no. The answer is no here. Once you have completed all the information from your spouse, you and your spouse, you come, and your daughter, or in the case you're a dependent, you come here to the section claim as a dependent on Form 1040, yes, and contributes to the household income, no, she's a minor. This is section number 1. Section number 1, remember, is just personal information. This has to be the same as on your tax return. Same information, cannot be different unless you move. If you move, then obviously the information is going to differ from the tax return that you file, but that's fine. Second, section number 2 is for wage earner. This is only if you receive a W-2. If you receive a W-2 and a 1099, There's a section also for that that you need to fill in, because when you receive a W-2 and a 1099, that means that you also have self-employment income. So be very careful if you have a W-2 and you also receive a 1099, you also report that, because remember, the IRS owns this information already. You file this information when you provide it, when you give them your tax return. So all this information, they have it, and they are gonna look at the records. And believe me, before the offering compromise is accepted, the IRS is going to call to the person who is filing. This happens all the times, and they are going to ask to the. And by the way, whenever you are doing an offering compromise or anything that deals with a tax debt, you only do this with a tax attorney or with an attorney, with a enrolled agent, or with a CPA, with a certified public accountant. Anyone else doing this for you and charging you is committing fraud. The IRS will not receive an offering compromise from anyone who is not holding any of these titles. And the simple reason for that, for an attorney, an enrolled agent, or a CPA, a certified public accountant, is for your protection. Therefore, anyone who says on TV, on the radio, on the newspaper, that you are going to pay pennies of your IRS debt, and that person saying that is not an attorney or an enrolled agent or a CPA is committing fraud. And believe me, no attorney or enrolled agent or CPA will tell ever that you are going to pay a pennies without looking at your case, because that is fraud. That is misinformation from the public. Therefore, whenever you are preparing your offering compromise, and you are thinking in doing this with a professional, always deal with an attorney, an enrolled agent, or a certified public accountant, a CPA, that are the only ones authorized to deal with before the IRS, to act before the IRS. So once you have provided your personal information on this application, section number 1, it's time to start inputting all the information of your income. This is your income from your employment. So the income from your employment is basically your W-2. But in addition, you need your stock payments, the payments that the checks that you receive, or the proof, the stock that you receive, or your paychecks. You need that information, because they are going to require that information here. So provide information here of your current employment. What is your employer name? What is your pay period? In this case is bi-weekly. We have set here that the employer name is Fresco Inc. The pay period is bi-weekly. The employer address is just a generic address here, 123 Street, City, State, and SIP. This you need to fill in with the real information. Do you have an ownership interest in this business? No. Answer is no, because you are an employee, unless you have an interest. Well, this obviously, if yes, then we say no, and then no. Your occupation is you're an employee. How long with this employer? 6 years. Spouse employer name, this is for your spouse, Cola Inc. Pay period is also bi-weekly. Does your spouse have an ownership interest in this business? Answer is no. Then next box is obviously we just leave it, and the address of the employer of your spouse. This is the employment information when you are both employed. If one of you are not employed, then the information of that a spouse of that taxpayer will not be here. And if one of you is a wage earner and the other one is a 1099, meaning a self-employed, then only one name here for the wages, and then the self-employed will have another section where the information needs to be entered. So let's continue with, okay, section number 2. That's section number 2, second section. Section number 3. This is where we are going to deal with all the information of your personal assets. For section number 3, you are going to need your bank statements. You are going to need retirement accounts, 401k plans, bank statements for checking, savings, money market, online accounts, and you also need virtual currency accounts if you hold anything. This is something new. Before this was not there, but you also need, if you have any cryptocurrency in any exchange, you need to provide that information to us of the most recent statement. If you have any life insurance that have a cash value, the only way that a life insurance has a cash value is when you have universal health insurance. Universal insurance. This is those policies that accumulate, that you pay instead of the term policy that in case of anything happens to you, you will receive your beneficiaries will receive money. This is the policy that you pay in a monthly basis, and they accumulate cash. So when you even though the policy expired, you will receive some money. And also, if you have safe deposit box, these are all your assets. Remember, anything that you have with value, including cryptocurrencies, bank statements, saving accounts, money market accounts, investment accounts, retirement accounts, anything that 401k plans, certificates of deposit, virtual currency, life insurance, and deposit box, safe deposit box, all that information needs to be entered here. All that information needs to be entered here. And just to give you an example, in this section, look at all the boxes that are here. You have cash, checking, savings, money market accounts, online accounts. This is, for example, for virtual currency, online accounts, but they also require virtual currency for online accounts, and a store value card. You need to have all the information from your bank statements. And remember, if any line is negative number, enter 0. They do not enter any negative number. They don't count here. So only positive numbers. Now, depending of what kind, even if you have cash, for example, in a safety deposit boxes, or even you have cash at home, you need to give that money. You need to give information. So we're going to start with a checking account. So we select the checking account, and then we put the name of the bank. In this case, it's Bank of America. The account number is 123, and the amount is 1,197. This information, remember, is taken from your bank statement. This needs to be the same as of the information presented to the attached here to this form. This will be the most recent statement. If you have another account, let's say in Chase, the number of the account and the amount that you have on the balance. This needs to match the bank statement. Then you do a total, and that is the amount that you have with the bank. So 2,082. Now, why I put 1,082? Because they give you a break. They give you $1,000 break. So number one, why this column is important, because at the end, all these big boxes with number 1, number 2, number 3, they are going to be gathered and the difference or the addition of this form minus the expenses will allow me to calculate the offering compromise. So note here that once I provide with all the balances that I have on my banks and the checking accounts or savings accounts, I will have a deduction of $1,000, and that's the amount that I have to put here. If you have multiple accounts, then you need to provide a spreadsheet, and then put the total here the same way, and deducting $1,000. But remember, if you have multiple accounts, meaning that you have multiple balances in your bank accounts, it is a possibility that you are not you will not qualify. This offering compromise is for people who are broke. Remember, people who have no way to pay these debts, and the reason that they have not been able to pay is because the income is not enough to pay. They have an economic calamity, they have not been able to work, they have unemployed, or they are receiving government help. That is, this offering compromise is made for. So don't believe in anyone saying that you are qualified and then you are going to receive a break from the IRS. Don't believe anything. I have heard many times people who call us our office and they ask, they say, I want to apply to offering compromise. So we went through some questions, and then they realize that they have been misled. There is no way for them to apply for an offering compromise if they have a job and they are receiving income from, and they have disposable income after paying all their debt. There's no way for them to apply for an offering compromise, so they settle for an installment agreement. We have a webinar for applying for installment agreement. There are some categories when you owe less than $25,000 and you owe more than $25,000, up to $50,000. So look at that webinar if you do not, for example, after going through the pre-qualifier, offering compromise pre-qualifier from the IRS, after going through this and you do not qualify, after you finally coming for the proposal, you do not qualify, you have the ability, or you have the option to apply for an installment agreement. So look to our webinar series, installment agreement. It will be very useful for you to settle that amount of debt with the IRS. Continue with our personal asset information, section number 3 of the offering compromise. They are giving you $1,000. So the addition of your bank's account is, in this case, $2,082 minus $1,000 is 2,082 minus $1,000, 1,082. That's the amount that is going to count for the offering compromise. We don't have any investment accounts or stocks or bonds or anything like that, or any virtual currency. So we continue. Line number 2 is 0. We don't have any retirement account. Now remember, if you do have this, you need to provide this information. And following the other accounts, you need to provide information according to what they say. Just to give you an example, the market value of an investment account is 0.80. That's the amount they are going to consider. Same thing with the virtual currency. So they are not taking the full amount of the investment if you have stocks or virtual currency because of the market fluctuations. In addition, for example, if you have a loan balance, many times, for example, for sophisticated investors in the stock market, you can open an account in the stock market and ask for a loan. For example, you put $2,000 and ask for a loan for $1,000 and you invest $3,000. So, for example, if my stock, just to give you, is $2,000 times 8 is 1,600, and I have $1,000 of loan, so here is going to be 600. But this is only if you, and that's how you invest. But this is only for sophisticated investors. So most of the times, we do not invest like this. We just it will be the amount of the current market value times 0.80, that says here. So the amount will be only 1,600. We're not doing this because remember, anyone holding stock market investments, the IRS is not going to approve the offering compromise because you have assets. In the case of, for example, a retirement account, there is the possibility that you have a retirement account, so you have to put that. Problem is that if you have that, the IRS is not going to accept your offering compromise because you have assets. And if you have a 401k, you can borrow against the balance of your 401k to pay part of the debt. Same thing if you have an IRA, you can liquidate the IRA even though if you don't have the age to forgive the 10% penalty, because if you withdraw money from an IRA retirement account, you are going to receive a 10% penalty before 59.5 years, even though the IRS can ask you to liquidate your retirement account. So that's why we have not covered this, because if you have investment account and you have virtual currency and you have a retirement account, you have assets. The IRS is not going to approve your offering compromise. So don't even try. Many people waste their money. We have talked when people call us. They say no, but someone told me that I apply anyway. We know that even non-profit organizations, just for the sake of helping the people, they say no, but apply. Maybe they approve. No. Problem is that the offering compromise guidelines are very strict. If you have a disposable income and it can be liquidated for your debt, then the IRS is going to ask you. So you are exposing yourself with all this, because once you send your offering compromise and the IRS looks at your application, they are going to request for this money for the payment of your debt. So don't put you in evidence. Better settle for a installment agreement. That's why I have not done any of these investment accounts, because anyone holding investment accounts, the offering compromise will not be approved, or if it is approved, it will be required. The approval is conditioned that you pay part of the debt with your investment accounts, with your virtual currency, or with a loan from your retirement accounts, or a liquidation from your IRA or part of the IRA. So if you don't want to do that, then just settle for an installment agreement. Watch our webinar for installment agreement. It's easy. Then there is also the cash value of life insurance policy. Obviously, if you have a life insurance policy and you have a cash value, believe me, the IRS is going to immediately request them. But not immediately, but the IRS is going to request that you use that money to pay your debt. So it's possible that not having any of these investment accounts and retirement accounts, as we say before, an investment account, a retirement account, a virtual currency account, and a cash value of life insurance, it is possible that your IRS, your offering compromise is approved. If you have any of these investment accounts, retirement accounts, virtual currency accounts, and cash surrender value, then the IRS is going to require you use that cash for the payment of the debt. Let's continue. Personal asset information. This is where the real property. This is where your car, your house, or your boat, any other real property you have, or personal property. no, real property, I'm sorry. Okay, in this case, remember that we say in section number 1 that the couple rent. If you own your home, they are going to require that information. So we said that you rent. And in this case, this is an example for a rental. So if they rent, there is no real property like a house. There is no mortgage. So is your real property coming for sale, or you anticipate selling? Why they ask you this? If you have a house and you own your home, the IRS is not going to approve your offer in compromise. They're going to put a lien on your property. And once you sell your property, then the IRS is going to cash their debt, and the difference is going to pay you. Problem if you do not do anything and you just leave the lien on your property. Remember, interests are accumulated, 0.5% per month, accumulated. And because it's not paying, after 10 years, probably the half or more than half of the amount that you plan to receive from the sale of your house is going to give maybe a quarter, maybe 30%. But better to fix your problems with the IRS before going for an offer in compromise. Remember, if you own your house, it's not going to happen. They are going to request you go to the bank and ask for an equity line and pay you there with that. And believe me, that will be better that the interest that the IRS has currently is 4.5%, because of the low interest that we have. If interest rate increases, that is going to increase as well. So it will be better if you don't do an equity line. Problem with equity lines is that they have a variable interest rate. So don't do equity lines. Just go to the bank, and if your house is paid off, get a mortgage, or go to the bank and request a fixed term loan. A fixed term loan, they are going to require some collateral, maybe your car, maybe you can talk to the bank to do your house as collateral. If they are the same, if they are the one giving you the mortgage, then no, it's not going to work. They're going to offer you an equity line. But if you have the ability to get a loan with a fixed interest rate, then do it. And if that is enough to pay your debt, then pay it. Don't even think about it. It's better to owe or have or having a debt with a fixed interest rate that one that varies with the interest rate from the Federal Reserve. So the IRS interest rates are variable. They vary with the interest rate from the Federal Reserve, from the central bank of the U.S. the Fed. And also the equity line varies with the same change of interest rate from the Federal Reserve. So the two of them are variable interest rate, and they vary. It will be better if you go to the bank and request a fixed term loan, and you pay or at least provide for that payment to the IRS, and the difference go with an installment agreement. But that will be the solution. Remember, if you own your house, it will not work. They are not going to give it to you. And mostly you will be forced to fix it because you have a lien on the property. That's the first thing that the IRS does. So we said there is no rent because of that. Now, for example, if you have if you do have a house, there is a section. They're going to ask you property description, the amount of the mortgage, the location, the lender. And again, they give you a break here. They only require the amount of the house, 0.8. minus the mortgage, and that amount will be here. But then remember, this is just an example. So the current value of the house times 0.8 is 80,000 minus the mortgage. That's the amount it's gonna be here, 30,000. But that is not the case. We said that this is not the case, so we don't have that. So we continue. So anything of this applies. This is just for the purpose of explanation, but this doesn't apply. So there is no real property. There is no property that you own in terms of a house, like real property. Let's say personal property, like vehicles. You do have to list all the vehicles you have. For the sake of the example here, we have said there is a Toyota, year 2015, purchase pre-owned, to 117, and millage is 36,500. The name of the creditor, it was financed with a loan, is TDO to Finance. Date of the final payment is 2/18/2023, and the amount of the lease is 441. This is what you pay in a monthly basis. You have to put that. Remember, this has to be backed up with a statement, with the finance statement for the car loan finance company. Then the value of the car is 24. The current market value, you go to the blue book or the Kelly book. You look for the amount of at the moment that you fill in the application, what is the current value of your car. They multiply times 8, so it's $24,000, 19,200 minus the amount that you owe is 22,815. That's the amount that you owe right now. You have a negative here. And remember, we said at the beginning that if there is any negative, it's going to be 0. So total value of a vehicle is leased, enter 0 here at total value. That's something else. If you lease the vehicle, then it's 0 because you don't own. There is no residual value in a lease. It's only residual value if you owe you own the vehicle. Okay, so subtract 3,450 from line 6. If line 6 is minus 3,450, is a negative, enter 0. So here is a 0. They're giving you a break here. Whatever is the amount of your car, you have a 3,450 that you need to deduct to this 3,650. But because of the amount is negative, because the loan that I have is larger than the amount of the current market value of the car times 0.80. The current market value is 24,000. The multiplied times 0.8, then it's 19,200 minus 22,815. That is the amount of the loan. Then I have a negative. But because they say it's a negative number, enter 0. So I put 0. So here actually is say here total value vehicle listed from a tax. This is in the case if there are more vehicles. This is only if you have more vehicles. If you have more vehicles, the possibility of getting approval of your installment agreement is reduced. So we are not going to use that. This is actually 0. This is 0 because it's 0 there. Then we continue. This is for the personal property. This is about your vehicles. Also, if you have any car, any boat, motorcycles that you own or lease. But remember, The larger the amount of vehicles you have, the lesser the possibility of getting an approval of your offering compromise. So remember that this offering compromise is for someone who practically is broke, like virtually is broke, or has a unemployment problem, has been with medical expenses, unable to pay their debt, accumulation of bills, etc. That is the offering compromise. The reason of the offering compromise is that. We continue. Other valuables like collection, jewelries, safe and the deposit boxes. We are not doing doing that. It's just cases that this is not working. If you have anything of this, IRS is going to say liquidate them and pay the debt. So all that section is empty. We're not doing anything with that. So we go back to the places where there is a number. So number 1 is 1082, right? Number 1 is 1082, and we keep going. Here, for example, there is a total value of vehicle is okay. That is a total value of the vehicle is a negative, and then out of this negative, well, they say that we subtract 300 and 450. This is for the vehicle. Remember, this is for the car. But say if line 6 minus 350 is a negative number, enter 0. So we put 0. If we deduct, we cannot deduct our negative. If we deduct it, it will be even more negative. So it's 0. It's a negative number, enter 0. So it's 0. Okay. So we keep going. 0. So the only number we have here is, we have to put the result, is the amount of the cash that we have in balance. So 1082, because all of the rest information is either negative or 0. So 1082. So 182. That is the assets that we have available. Remember, we need this for the future. This is box A. They are going to ask us at the end. Okay, so this is doing a recapitulation. We have covered the form 4338, the collection information for wage earners. We put the personal information, section number 1, then the employment information for section number 2, and then the personal asset information for section number 3. This is where the bank accounts come. Section number 3 continue the personal asset information. Remember, section number 3 is personal assets. What are your assets? In section number 3 continue, we have the real property and the personal property with the vehicles. So the addition of all this comes at the end with box A at the end, on page number 12. This we have to put the addition of all those numbers, and we have to exclude all negatives and make them 0 in the respective box. So once we have that, we have completed the first section of the form. So we continue. Section number 4 is if you have received a 1099. This is if you have received a 1099. So let's say that you work in real estate. Questions are the same. If your business is sole proprietorship, here the question should be yes. Yes, because you work by yourself. The name of business, Real Estate Inc. The address will be 123 Real Estate Street. City, state, and city. Then business telephone number, whatever the number is, employee identification number. This is only if you have a company. If you don't have a company, then this is blank. If you have a website address, the address of the website. If you have a trade name, or doing business as, you also need to put the number here. And if you receive payments from this business in a monthly basis, you need to detail that. I'm sorry, let's leave this blank. This only works tax deposits if you deposit for payroll. If you don't have payroll, then this is blank. Remember that most of the times when we work self-employed, we receive a 1099. We work as a consultant or as a professional. There is no tax deposit for that. We pay that when we file the return, and there's no gross repayment. In the case that your spouse has any other business interest, you will need to detail here. The answer in this case is no, so there is no more information. And what type of business? The type of business and then one other is self-employed. You are self-employed. There is no business. As I say here, is a business sole proprietorship? Yes. And type of business? Self-employed. This is only, remember, this will apply whenever you have it's a self-employed. This will only apply self-employed. And if we already have this, then we can even leave this blank. This is not required. Well, it seems that when you mark it cannot be unmarked. Then this type of business, this is only if you have a business name, meaning that you have a company. Only if you have a business name, a company, and an employer identification number separate from the Social Security, then you need to fill this information. In this case, this is not true. It's only a person receiving a 1099. There's no even employer identification number. Okay. So next, business asset information. This is for self-employed. This is exactly the same as the section for when we fill in for the employee, for the person earning wages. It will be exactly the same. The bank account. This is remember, this is providing that this business, the real estate, well, in this case it was not real estate. The real estate, this is providing that the real estate that you do is holding a separate account. This is if this business, even though it's not incorporated, is acting as doing business as, for example, you hold an account for that business. This is just for illustration purposes. This typical case will happen, for example, if you want to separate the amount that you receive from your personal income. In practice, this doesn't happen. Many times, taxpayers commingle their income from the business and consolidate that into one single bank statement. It is better, and I've seen that taxpayers separate their business accounts or their business income or their business cash from the personal account. So even though you don't have a bank, a company, a corporation, or a limited liability company, there are cases, or there is also possible that you have a second account, even if your personal account, that is exclusively used for the business. So we have assumed that you have a separate account, even if your personal account, you have a separate account for your business. If you have one single account for your business and personal, then this section needs not being filled in. It is only if you have an account that receives the income and does the expenses or pays the expenses from your business, even though it's a personal account. If it is so, you need to detail that account here. This is exactly the same as the other. The previous one we saw before for the wage earners. The bank name, the account number, and the amount. We have stated here that is 3,500. So that's the only amount, that is only account that is available. So it's 3,500. Remember that you need to back up this information. You need to include this information when you file your application for offering compromise. Same thing, there are some assets for the business. There is a car that it's used exclusively for the business. This is not a personal auto, this is something else. In the case, for example, for a mechanic or for a plumbing or for a builder or for anything working with construction or repairs, this will be, for example, a band that is used exclusively for business. So in that case, the car is $10,000. This is the market value times 0.8 minus a balance. So it's 8,000 minus 5. There is a 3,000 equity in the car. This is, remember, this is similar to the personal property we have with your case. So here, this is, for example, tools. Let's say $1,000 tool, it's 800. The amount is 800 here. This is only if you have tools or any other personal asset that you use. So adding these lines is 3,800. But the IRS also gave a deduction of 4,850. So here is 0. So here is 0, and the only available business equity in assets, the only amount available here is 3,500. The amount in cash, 3,500 here. That's why we put 3,500, because this is 0. So 3,000, even though they are 3,800. There is the IRS gives you a break, 4,150, same as we saw before with the cash of the person. For the wage earners, $1,000. In this case, is almost 5,480, 4,150. So the only amount available for cash, the only amount available for this business is cash, and we put that 3,800. This is box B. We have completed box A. Now box B. Okay. So in addition to this, we need to provide with the information for the expenses of the business. What are the expenses for the business? This is a classification of the income per month. Remember, this is only if you are self-employed, or if you work by yourself. You work as a independent contractor, for example, a plumber, an electrician, a repairman, and you collect payment for your work, then you need to provide this. So we have done this. It's very simple. It's $1,500 per month. That is the receipts. Remember, if you have gross rental income, for example, they are not going to approve it because you have a property. So that's why we recommend go through the pre-qualifier. But remember, if you have income enough to pay your debt, your rent, and you have disposable income enough to pay on a monthly basis, the IRS is not going to approve your offering compromise. They are going to go for an installment agreement. So better to to be real from the beginning. So the expenses of this business is 1,500. We have said supplies 500, and the net business income is 1,000 per month. Remember, this is 1,000 per month. Now, this is only for a illustration purpose. If there are materials, inventory, and you pay wages, rent, in addition to supplies, utilities, gas, repairs, insurance, taxes like real estate, franchise, occupational, debts, or other business expenses, you will need to list them here as well. Remember, if you put a negative here, the IRS is not going to believe you. And this is the same thing as the Schedule C. We always recommend to taxpayers who work self-employed, receive 1099, never to report a negative on the Schedule C. Never say that you are losing money because the IRS is going to audit you. No one does business to lose money. No one. Not an individual. Maybe 1 year, but it's not true. How did you support yourself or your family? So it's not credible. So avoid here putting or refrain from stating that you have a loss. It's not going to fly. The IRS is not going to believe that. So this must be positive. That's why we did this positive. $1,000 positive. Remember, this is box C. We have completed box A, box B, and box C. But this is box C is only if you have a business. If you don't have a business, you don't need to do the section of the self-employed. So only box A and box B. Section number 7. We have covered quite a few sections. We are in section number 7. Section number 7 is monthly household income and expenses. This is where you are going to tell the IRS how much you make. They start with your monthly. Remember, they say gross monthly income. This is income without deduction. This is the gross from your pay stub. So your pay stub is, we're going to say is in a monthly 2,117. This is just an example. Remember, if you make more money than that, believe me, the IRS is not going to accept. That's why I put all these low numbers, because if I put more money, the offering compromise will not come out. I want to show you once the offering compromise is completed, believe me. So, the employee is 2,117. We are assuming here that only is one. There is no wages. So maybe if we come back to section number 1, when we said here, we remember that we said section number 2. We said the occupation of the spouse is Coca-Cola Inc. So we have to be congruent. If we have not reported income from the spouse cannot be here as making any money. That was a mistake. No, because he has no this is the occupation, so no. So you have to put that is no. If you put here, income is gonna increase and it's not gonna be accepted. Believe me. So this is, remember, section number 2. Section number 1 is the spouse and the 2 taxpayers, the 2 spouses. Section number 2 is the employment. Section number 3 is asset information, real and asset information, personal asset information, personal and real. Section number 4 is self-employed information. This is when you do a 1099. Section number 5 is business assets for self-employed. This is the case of the cash and the car and some tools. Section number 6 is the income and expense for self-employed. This is like a profit or loss. And section number 7 is where we are at. That's why you're correct. So We didn't do any gross wages for the spouse because we are expecting that the approval of this offering compromise. So the only breadwinner is the spouse, the first spouse. 2,117. There is no interest distributions, rental income, or anything like that, or there is no alimony received, anything. So the box D is 2,117. So we have gone through box D. In addition, you need to select or to place all the amounts that you use for expenses. This is the average monthly expenses. This is the amount that you make, the amount that you spend every month, or for your support and for supporting you and your family. You should list the full amount of the allowance, even if the actual amount you pay is less. This is what they say. There are some standards that you need to comply here. This is not, for example, the maximum amount. Here you need to put the amount that the IRS allows, and this is where you need to find out what are the allowable standards. The IRS is not going to allow you, if you have a rent of $4,500 a month, that is not deductible. You only will be able to deduct the maximum amount, the allowable standard that the IRS has set. So let's go to the allowable standard. Now, there are some allowances that the IRS has created for the different amounts. For example, for food, there is a national standard that the IRS has created. We go back and let's open this in a separate window. For example, let's go back to the form. The first one is food, clothing, expenses, miscellaneous, housekeeping. There's a standard here. So let's see what is that standard. Standard is just a line here. There's a link. You click on the link and then they will go to this page, and it will lead you to this page, and then you select the food, clothing, out-of-pocket healthcare expenses, housing and utilities, transportation. You have to be real, remember. Okay, so let's see. Following the form, I omitted food, clothing, and miscellaneous. You should not. You should put that amount here. How do you find that? Even if you make, let's say that food, clothing, you spend $200 a month, so it will be $800. Before putting $800, you go to the standard and check what is the amount. Here, for example, food. For one person, this is the amount per month. For two people, for three, and four. So if you have a family of four, even if you spend if you spend let's say $200 a month, so it's $800 a month, and you have a family of three, you cannot put 800. You put 779. If you have a family of two, you cannot put 800. You have to put 715. Where do I get this? Remember, I am on the form, and here, for example, let's say here that I spent $1,000. I'm gonna say $1,000. Okay, so 1,000. This is how much I can prove. But I cannot put that number because they say you should list the full amount of the allowable standard, even if the actual amount you pay is less. That is the maximum amount. For other boxes, your actual input your actual expenses. You might find the allowable standards at the limits. So, if you make, for example, if you make $1,000 here, there is a maximum that they are gonna give you, and the maximum standard, I go by clicking here, and that leads me to this page, collection of financial standard, or the one that I have here. So, and I scroll down, and here I have standards. So I'm gonna go with the first, national standard. I click national standards, and that leads me to this page. They are going to tell me here that in this case, this is the maximum amount that I will be able to deduct. Now, I cannot say more than what I have stated on my tax return. So for this family, they say that there are 2 people plus 2 adults plus a kid, so it's 3 persons. So this is the maximum amount that they will be able to use, $779. So here it's not 1,000, it's 779. That is how you work. This is what you use. Now, what happens if, for expenses claiming boxes 39.45 only, you should list the amount of the allowable standard, even if the actual amount you pay is less. So here is the allowable standard. Don't go beyond that. So it's very clear. You should list the full amount of the allowable standard. So it's 79. Housing and utilities. They say that it's 1,200. Great. I'm gonna delete this because that's not part of my addition. It's not because I want to add. But if you have, that's how you find housing and utilities. Let's keep going. I go again to the next one. Food, clothing, out-of-pocket expenses, housing and utilities. Housing and utilities, I'm going to open a new window. Housing and utilities, I'm going to come here. I'm going to go by the state, Florida. Just Florida. And then here, depending on your county. Let's see date, or Miami-Dade. Miami-Dade. Did you look for your county? Miami-Dade, depending on the number of people. So 3 people, Miami-Dade is 2,174. This is the amount that you will use, 2,174. So we have to change our numbers, 2,174. So in this case, I say, remember, for expenses claiming in boxes, you should list the full amount of the allowable standard, even if the actual amount you pay is less. Why this? The amount that you put here, I'm gonna put 779, and it was before there. I took that from the allowance that I have from the food. This is the national standard for food, clothing, and other items. For 3 people, it's 779. So I'm gonna put there 1,200. I have to put the amount that they say I can claim. It's 2,174. 2,174. Why this is gonna help? Because you are putting more money. This is a larger expense. Next expense, vehicle loans or lease agreement. I think that this is real. This is, let's see if there is any, I think there is some transportation. Let's see transportation standard. Some transport, ownership costs, operating costs for transportation. Okay. So, okay. So one car is 521. Two car is 1,042. So one car is 520. Ownership cost 521. This is if you own the car. If you do not own the car, it's less. You have to go by your region. But this example, we said he owns the car, 521. So I'm gonna use that number here, 521. Remember that they say that you should use the full amount of standard, even if the amount you pay is less. So I'm gonna take the standard. Vehicle operating cost. In this case, this depends of the amount that you, depending on the county. The operating cost here is the county. So you look for example, in the South region, Miami, 286 is this one car, 286. So here is 286. Public transportation costs nothing. Healthcare premiums. Let's see healthcare premiums. It's deductible. There is also a standard for that. Healthcare premiums. Housing utilities, out-of-pocket healthcare expense. Let's see here. There is under 65 is 56. This is in addition that the taxpayer pays for income. So this is a $56 that each taxpayer is available to deduct. So this is gonna be 102, but times 2, 56 times 2 is gonna be 102. Yes, 102. And I'm sorry, 112. 56 times 2. Court order payments. This is alimony, for example, or child support. I am going to eliminate that. I'm going to use these numbers. That there is no. This is only apply for court order payments, child deferment care, term life insurance premiums. This is if you have insurance. Current monthly taxes, if you pay like monthly estate taxes. This is not usual. So I'm gonna stay with this. I'm gonna need to do an addition with these two numbers because they vary. So let me do that addition 1 minute. We'll continue that. So it's 779 plus 2174 plus 521 plus 286 plus 112 is 3872. This is box E, 3872. This is the total of the expenses. Box E. Box F, but this is not real. This is not real because I cannot have a loss here. I have to have some income. So I'm gonna make up here some more. So 372 minus 64. No. Plus 64. So I'm gonna here, or I'm gonna do here section number 7, instead of putting 2917, I'm gonna say that this is 5406. 5406, and then both be 5406. It's a miscalculation. So 5406. So the husband makes 5406 in a monthly basis, and after all these expenses of 3,872, there's a remaining monthly income of 634. That is the remaining monthly income that the couple is able to use for payments of any debts. So this is the amount that the IRS is going to consider as your disposable income. This is on section number 7, remember, section number 7. Section number 8 is where the calculation comes. So there are two options. Excuse me. Box F, you will bring box F here on section number 8. Section number 8, box 8 is 634. Enter total box F. Multiplied by 12 is 7,608. This is your remaining income in 12 months. This is if you intend to pay in 5 months or less. If you estimate to pay in 6 months to 24 months, you have to multiply 634 times 24. I always recommend our clients to pay in 5. There is less time for the IRS to do any reconsideration, anything. Even the IRS is going to ask you, where are you going to get the money? And there is a section for that. We always recommend that, and that this has to be real. We recommend that you ask for a loan to a relative, because you have to name the relative on the application. It has to be credible, and believe me, the IRS is going to review the tax returns and information from that taxpayer. So if you don't have a relative that it can be named in the report, then you either need to do something like asking for a loan in the bank or at the bank, or asking for an equity line, or asking for a loan from your car, or putting your car as a collateral, or any financial arrangement that you might do. The problem with that financial arrangement is that the IRS can say, why you don't borrow more and pay more of your debt, or pay all the amount of the debt if you have the ability to borrow. That's a problem. So it is better that you find a real person, someone who the IRS is going to review when you provide the number. It could be if you are not married, it could be your girlfriend or your boyfriend. It could be your brother, your sister, your uncle, your aunt. But it must be someone who is not part of the same household. It could be your grandma, your grandpa, your dad, your mom. Someone who is not part of the same household. Otherwise, the IRS is not... It has to be real, believe me. It must be real, because the IRS is going to call to your tax advisor, to the attorney, to the enrolled agent, or to the certified public accountant who is doing your case, and they're going to ask all these questions. It's also very useful that you do not do the offering compromise with the current accountant, because the IRS is going to, with your current accountant, because the IRS is going to call to the accountant, or to the current attorney, or to the current enrolled agent, and if they have filed the return, they will need to answer the IRS why you have not paid, and they cannot lie. So it's better to do it with somebody separate from the one who filed your return, so that person will not know why you didn't pay your debt. You will have to explain to him that something happened, and the case is that A or B or C happened to you, but that person doesn't have the the knowledge of the events. He was not he was not your accountant when the event happened. He was an accountant after, or he was an attorney, or he was not the enrolled agent who filed the tax return. So better to do this with somebody else different from your current accountant, your current attorney who filed your return, or your current enrolled agent who filed your return, for safety. And when you are saying who is going to help you with your debt, that has to be real. Otherwise, the IRS is not going to approve the offering compromise. It has to be real. So if you plan to do this in 5 months, you have to say who is going to lend you the money, and this has to be a regular person with limited resources, not a bank, not because bank has resources, and the IRS can require that you borrow more money. And okay, that is for box F. Enter the amount from box A plus box B. Remember, this is enter the amount from either box D or box B. These are the other boxes. So let's see, box A, box B. Let's say box A and box B. Box A, if I recall, is the cash. So box A is 1,082. I'm sorry. No, keep going. Let's keep going. Box A is at the end. Box A is 1,082. Box A. Page 12. This is the addition of all the answers. So it's 1,082. That's how much I have to put. Box A. So let's start arguing that. 1,082 plus box A plus box B. So let's keep going. Box B, 3,500. That is 4,582. So let's keep going to the end. Box A plus box B. So here actually it's 5,482. Enter the amount from either box G or box H. Box G or box H. Box G or box H. So I think that is box B, box C, box D, box E, box F. Is there box G or box H? F. Let's see. Let's keep going. I don't see that. The amount box C or box H. Okay, so box X, box G here. So box G, 7,068, and here is how much you have to pay. Is 4,592 plus 768 is 12,009. That is according to your income. How much if you pay in less than 5 months? This is how much you plan to pay. With a debt like this, remember that this is regardless of the amount that you have as a debt. This is the offer based on your income. Note here that there is no debt stated. This is only the calculation of the amount that you have, that you can offer the IRS. The minimum amount that if you pay in less than 5 months, the IRS is going to accept. As an idea, a debt like this will be typically will be $120,000. It's a 10% of the amount of the debt. So let's review this 4,582. How is that we got that? Remember that they say here, Okay, so enter the amount either for box G or box H. Box G or box H. We are planning to pay this in 5 months, so they multiply times 12. This is your disposable income times 12. This is 6,008. This is plus whatever assets you have available. So let's review the asset available. 4,582. This is box A and box B. So box A, okay, available in equity. This is 3,500. This is 3,500 is the amount of cash. So 3,500 plus the other one, the box A is 1,882. Let's see here. This negative. So total value of vehicle is less than 0. So because this is negative, and then it says subtract 3,450. If line 6 minus 3,450 is negative number, enter 0. So it's correct. So I have 1,082 in my assets. This is my cash, personal cash, and 3,500 from the cash of the business. 3,500. So it's 3,500 plus 1,082. That is the amount of cash I have available. 4,582. This is how. This is the summary. This is why we need to do all those calculations, tedious calculations. Remember that if there is no business and there is no cash available, then this will be only 1,082, and the amount of the day will be lower, will be much lower. The reason that this is 12,800 is because there is two amounts. There is the amount of the 1,082, 1,082 of the cash from the personal bank account, and 3,500 that is the business amount of the cash from the bank available. So this will be 4,582. The more cash you have and the more disposable income you have, the larger is the amount of the offering compromise. So for the sake of a summary, these two numbers, the ones that make up the offering compromise, in this case 12,190, is the offering compromise is composed of the cash and assets disposable for the taxpayer. The lower the cash and the lower the asset, the lower the cash and assets, the lower the amount available for disposable assets. And same thing, the lower the disposable income, the lower the amount that will be required to pay. So this is the offering compromise, as a summary, is composed of your cash and available assets, disposable assets, and the amount that you have as disposable income. So it's composed of two parts: cash and assets, which is all assets, and disposable income. Multiply by 12 if you plan to pay in 5 months or less, or if you plan to pay 6 months or up to 24, is multiply times 4. Obviously, if you pay in 6 or more, you're going to pay much more, double that 7,308. This is double, right? 14. So better to pay in 5, and to borrow the money from a person, a relative or a friend. This is how we calculate the offering compromise. This is very similar to what you will go through when you are in the offering compromise pre-qualified. This is exactly the same. It will be similar information at the end. They will give you the same result, but you will know. They will say yes, you qualify, or no, you will not qualify based on your income. In this case, this is the maximum amount. If the amount of your debt is less than that, then obviously you need to do an offering compromise. If the amount of your, an installment agreement. If the amount of your debt is higher than 12,190, then it works. But this is the minimum amount, calculated based on your disposable income, cash and other disposable assets, cash and other assets, and disposable income, that is the addition of your monthly income minus your expenses. But those expenses, as we saw on section number 7, monthly household income and expense information, must be based on the standards that you need to find out the standards. Okay, so we have completed the offering compromise. Then section number 9 requires a little more of information. Most of these questions goes no. For example, have you party in a litigation? No. Have you filed bankruptcy in the 7 years? No. In the past year, you live outside of the U.S.? No. Have you ordered being in litigation involved the IRS? No. Any beneficiary? Are you a beneficiary in a trust? No. If you are, then it will not be accepted. Are you a trustee? No. Do you have any safety box? No. In the past year, have you transferred any asset? No. If you have, believe me, they are going to accept it either, because you did have assets. Section number 9, other information. Do you have any assets or own outside any real property outside of the U.S.? No. Do you have any funds returned in trust by the party? No. And then it comes to signature, section 10. You sign and your spouse, and you put the date. And here's when all the attachments comes. You do the copies of the most recent pay stubs. This is like a check mark list. Copies of the most recent statement investment. There is no investment. Copies of the Social Security. No, there's no Social Security. There are no dividends. There's nothing like that. There's royalties or nothing. Copies of bank statements in the most recent 3 months. If you operate a business, copies of the 6 month recent statement for each bank account. So personal is 3 months, operating business is 6 months. Copies of the statement for lenders on loans, mortgages, vehicles, etc. There is no receivables verification, there is no delinquent or anything. Documentation in special circumstances, explanation of circumstances. This is valid if you have some medical condition or anything. Condition that you want the IRS to consider. Otherwise, the lesser you say, the better. Believe me. Attach a 28 for employer attorney. If you would like, this is not here. Attorney, CPA, or enrolled agent to represent you to the IRS. Anybody else will not be accepted. So anyone not holding these credentials, enrolled agent, CPA, or attorney, will not work for the IRS or with the IRS. And they completed and signed Form C56. Remember, we have not completed Form 656 yet. We have completed only Form 433, that is the information, collection information statement. Only Form 433 and the 10 sections. There are 10 sections. You only need to fill in 9 of them, because one of the sections is for companies. So section number 10, you sign it and date it. And then Form 433B is for businesses. You skip that and you keep going to Form 656. This is the actual offering compromise. Then did you use the pre-qualifier tool? I'm going to say here yes. Because then if you fill it in and it worked, this is you're saying there is that you are using all of the resources that they have, so they will be committed to use this form. I will even say print the forms, print the pages that you get from here one by one and attach it to this. Just just for the sake of showing the IRS that you did. Believe me, it will create even a smile on the officer. By the way, whenever you call the IRS, for example, when you are to request this transcripts or this information, remember contact the IRS by phone to request the account transcript. Whenever you are talking to the IRS or calling the IRS, you treat them like police officers. That's how we deal with the IRS. I always talk to an IRS officer. Yes, officers, no officer. Yes, officer, no officer. Thank you very much for your attention. I never address them by their names or by anything else. The last name, I always address them by officer because they feel very respectful, and believe me, they are very, very cooperative whenever we address them very respectfully. We also recommend the client not to be on the line. We have experiences that client on the line they become emotional, and for the sake of your file, it's better not to be present because the officer is going to write notes on your file, and the next time you call, the other person who has not been dealing with you is going to read those notes, and his or her attitude is going to be very difficult because you have been difficult with somebody in the office. So better deal this with a person, with a professional. That's why they say here that you provide with a form 2848 when we were reviewing remember to include all applicable attachments below in section number 10 of the signatures of the collection of information. Attach a form 2848 power of attorney if you would like to CPA or agent to represent you. You can complete the form and everything, and then you just name someone to represent you before the IRS. It's not necessary that the person complete the form for you. You can do this by yourself, but it will be better if you let a CPA, an attorney, and an enrolled agent to do this because of the question. Remember that they're going to call and ask why you didn't pay this, and you have to state a real answer. If a professional like a CPA, attorney, or enrolled agent receive the call, they will have no case because they don't know. They will know only what you told them, and they will repeat that, and they will say that is the client one, and the IRS will not contact you but the client, but the attorney, or the CPA, or the enrolled agent. So whenever you are dealing with these cases, better and you are requesting information from the IRS, better to treat them with respect and address them as officers, like they were police officers, because they feel very well when they are treated with respect, the respect that any individual deserves. Even more in the case that you need something from them, like requesting the information at your account. Okay. So we are in the offering compromise. We're going to say that you did use the pre-qualifier. Then again, this is about your information, section number 1. This is exactly the same as on your tax return. Your name, your spouse name, social security numbers, your address. Mailing address is different, but usually it's not. City, state, address. Then is this a new address? No. If this is a new address, you have to put yes. And they say here, if yes, would you like us to update your record yet? I say yes. Your employee identification number, this is blank because you don't have any business. Here is where the individual tax periods you have to state. For example, if you only for 2009, you will say 2009. But if you have more periods, here's when you say 2009, 20, just to give you 2012, and then 2015. This is if these are the years that you owe. And you have to put, oh, this is why you need the account transcript. Because you need to, for each year, remember, you need to have the account transcript for each of the years that you owe. If, for example, here, note what they say here. Any minus sign below signifies a credit amount. In this case, this is a positive balance, meaning that you owe. If this will be a negative, that is a refund, meaning something that the IRS owes you. But a positive balance is a debt. You have to pay. So to know how much you have to pay, you need an account transcript. To request an account transcript, you need to call the IRS 1-800-829-3903 and request the account transcript. But you need to tell them what are the years that you need them for. And once you have all the transcript for all the years that you owe money, you go back to the application and you tell them the years that this application is for. If you leave one of the years out, then it would only apply to those years, and if you owe money in some other year that is not in this application, that will not count, and you'll have to pay that either with a separate offering compromise or with an installment agreement. So make sure that you have all of the account transcript, all of the accounts transcript by calling the IRS 1-800-829-3903. And then you treat them as officers and you request, can you please send me account transcript for years 2009, 2012, and 2015. You can also ask them if there is any other year that you owe money, and they will look for you. Especially if you treat them from the beginning, you always speak them with respect, and you show them that you really don't know. They are very helpful, believe me. Like anybody who finds a person who needs help, anybody will give guidance for a street direction or anything. The IRS has the same training for their officer. They are very professional, very humble, they are very nice, but if you behave in some disrespectful manner, believe me, results are not going to be nice. So better treat them like a police officer. Like when you are stopped or for a traffic line or for a police officer, treat them exactly the same, with that respect. Once you find out the years, you should know this from the beginning, then you tell them. And you only use this because this is only for personal, for individuals. The years that you owe, that will be applied your offering compromise. You keep all of the rest blank. You keep going. Low income certification. This should say from the beginning, if you have low income certification, you will be spared the $205 $205 fee for the application. But that only is, for example, if in this case, a family of 3 makes $53 in a year. If we go back, for example, if we go back to the application and we do the math, the amount that the spouse make is 400 this is on a monthly basis. So in a monthly basis, the amount that you make in this case is 4,506 times 12 is 5472. So 5472. Let's see how much is the maximum amount considered for 3 people household. So they say for 3 is 53,325, and this couple, this household makes 54,000. So no, for 3 is 53,325. This household makes 54,000. in a year. So no, you will not, this application will not qualify for the low income certification. It will not qualify. So you will have to pay $205 and needs to include that in this application. This is only if your yearly income based on this. Remember that. Please note that failure to check-in box above will show no payments being applied to your tax debt or not returned to you. Do not complete the deposit section 4 if you have a check deposit section here. So they say here that you need to check a box here if you are considered a qualified, if you qualify for the low income certification, and any money that you send with this application will be applied to the debt. But if you qualify for the low income certification, do not send any money until this application is approved. If you qualify for the low income certification, do not send any money because you are forgiven from the application fee. Do not send any money. Otherwise, that money will be applied to the debt. So if you qualify for the offer in compromise, you will check this box. I qualify for the low income certification because my adjusted gross income is equal or less to the amount shown in the table below. Or I qualify for the low income certification because my household size and gross monthly income times 12 is equal to 2 or less to the income shown in the table below. So you qualify to any of these, as we said before. Do not send any money until the application is approved. So in this case, this application do not qualify. So this as they say here, being that there is nothing qualified, the money will be the amount sent will be used for the payment of the application. Okay, so we keep going. Section number 2, this is only for the business. There's no business here. There's no business tax period. Reason for offer is a doubt on collectibility. This is the most, let's say, the most frequent reason that this application is filed for. Special circumstances, better not go there. Because you will need to explain the exceptional circumstances. That would be economic hardship or collection or full liability or under my public. Just the tax law being amended. But remember, you will need to explain here. This is if you have a medical condition. If they're real, because they are going to require you attach a statement. You need to attach a statement. You need to attach the accounts, the hospital bills. You need to attach a diagnosis. You need to substantiate your claim, your statement. So if that is not the case, don't try to make up anything. Just say that's a collectibility because it's proof in this that you do not. It's doubtful that you pay, and this is where we use the terms. So we have to update this because this is a lower amount. So the amount that we said that this debt is for is, I think that is 12,190, if I recall. Let's see the application. Yeah, 12,190. That 12,190. Copy. 12,190. We have to put it on the offer in compromise. Section number 4, the payment time is 12,190. So if 12,190, they are going to require, if this is paid in five months, they are going to require a 20% payment. So 12,190 times 20% is 2,438. This is what you need to include with your offering compromise in addition of the 205 or the amount of the fee, whatever the amount of the fee is. and the remaining balance is minus 12,190 is 9,752. That you will have to pay in 5. That is 1,951. You have to pay that 1,951, 1,951, 1,951, and then here 1,950 because of the rounded, because I'm rounding the decimals. This is what you are compromising to pay. If you are paying this in lump sum cash, it's not really lump sum, because it's not one amount. You are paying this in fewer than 5 months. I do not recommend do this payment in 1 or 2. I have clients ask me, do I pay it in full after the first payment? I say no, because you have stated a payment schedule. Stick to the payment schedule. Do not try to go ahead of that schedule. Just pay what it is, because the IRS has in mind that you don't have enough resources and somebody else is giving this money. So it has to be real. Don't go ahead of trying to make up for the payment of the IRS. Just pay whatever you say. Pay and stick to that calendar, to that schedule. We continue periodic payment. We are not using that. This is IRS use only. Then the section number 5, there is no electronic payments, nothing like that. Then you keep that section. Here, then if you have excuse me, if you are a low income if you have low income, meaning that your income, as we reviewed before, your income is under the limit, then do not do this. You don't need to do any of the fee that is required. What I say here, if you are paying more than the initial payment with your offer and you want to part of the payment, treat it as a deposit, check there or below. So my payment of, in this case, will be the amount that is here. You have to pay 2,438, that is a 20%. 2,438 includes a 205 application fee and something for my first monthly payment. No, don't do that. You only do the payment for the deposit. And they you may say, yeah, do not designate the amount sent in your offer to cover the initial payment as fee as deposit. Doing so will result in return of the offer in compromise without a plea right. So do not do that. The only thing that you need to do here is your payment of $2,438 plus 205. So here it will be 2,438 2,438 plus 205, or whatever the fee is there. So it will be 2,643. That's it. My payment of 2,643 includes 205, includes the 205 application fee and 0 excuse me for my first month payment. I am requesting the additional amount of 0 to be held as deposit. 0. You only put here the amount that you pay for the 20% and the 205. That's it. Remember, if you qualify for low income certification, you do not need to do this. Do not complete if you have check. You don't need to complete this, because then you're broke. You don't need money. If your offer is rejected, return or withdraw, please check one of the boxes below. So this is what you need to say what is going to happen if the offer is rejected. If your offer is rejected, return it to you and initial there. You have to initial it. A, B, C. Your deposit, if this is a deposit, okay? Unless you indicate it in the boxes box. Okay. So there is no deposit, 000, just the amount of the debt plus the 205. The amount of the 20% application payment, down payment plus 205. This is, as I say, my brother-in-law, section number 6, the source of funds. Who is going to give you the money? We always recommend that is you name my brother-in-law, and then the name and last name will lend me the money to pay. This has to be credible. If you put anything else here, it will be rejected. And this is what we said at the beginning. Is include checks for the payment and application fee. Separate. 2 checks. Make checks payable to the United States Treasury and attach at the front of your offering compromise. Do not send cash. 2 checks. This goes with this. Remember, if you are paying more than initial payment with your offer and you want any part of the deposit check below, say, my payment of 2643 includes a 205 application fee and 0. Now, these 2 payments need to be in 2 separate checks. One for the application, one for the 20%. And this is what I said at the beginning, filing requirement. I have filed all required tax return. I have included a complete copy of any tax return filed within the last 12 months of this submission. In addition to the requirements that we reviewed at the beginning, you need to include a copy of your tax return file. If that have been filed within 12 weeks of this offer submission. We recommend that this is always done after tax season, after April 15. Once after April 15, probably perhaps 2 or 3 months, because the IRS will have the records there. You don't need to send in a copy. But if there's no problem, if it's needed, then it will be sent. Tax payment requirement. I have made all the required estimated tax payment for the current year. This is very particular. If you are self-employed and you self-employed taxpayer need to do quarterly payments because they don't have any withholdings. So if you work as a self-employed or your spouse works as a self-employed, the spouse, you or your spouse need to pay the estimated payments based on your income, and that is very easy. If you work as a self-employed year after year, you request your payment stubs to your accountant or your attorney or your enrolled agent, whoever files your tax return, the stub payments for quarterly payments, and you pay them. When this offering compromise is filed, the IRS is going to review your file that the estimated payments, the quarterly payments, if you are a self-employed individual, self-employed worker, you need to file, and they are filed already and paid. They are paid. They must be paid. Quarterly payments for self-employed need to be paid for this offering compromise to be accepted. Excuse me. Finally, there are some terms that basically is that you are under penalty of perjury, that this is true, and you are submitting to the IRS all this information, and this is true, and you're subject to the IRS requirements. If anything happens, you still have a right to appeal the decision of the IRS, You promise that you comply all your future tax filings and tax payments, and you agree with the limits. You understand the IRS might file a notice of federal tax lien on my property if you have property. You are submitting as an offer if you are an individual or joint liability, and you understand the IRS is required to make certain information public. All this, and this comes to section 8, the signatures. Your sign, your phone number, today's date, and your spouse. And by checking this box, you authorize the IRS to contact your telephone number listed above detail concerning this offer. This is if you act by yourself. If you designate a person to act before the IRS for you on your behalf, an attorney, an enrolled agent, or a CPA, an accountant, that is not going to happen. And if somebody else prepare this application, it needs to be here. Now note this, that the preparer needs to have a CAF number. This is the number that attorneys, enrolled agents, or CPAs have before the IRS, or the PTIN. The name of the preparer and firms, if there is a firm, if there is someone, if there's a company. Sorry. This is for the IRS also. This is the entire application. Once you have completed this, there is an application checklist. Did you complete all fines and forms? Did you make an offer equal to the offer calculated in the amount? Have you filed all the forms? Did you include a complete tax return filing the total fee? Did you select payment option? Did you attach Form 483 if applicable? Did you sign attachment? If you are making an offer, include this. Supporting document, did you include photocopies? If you want a third party to represent the confidential information, here you have to file this form. Did you include a check or money payable to the IRS for the initial payment? See, this is critical. Did you include a separate check or money order payable to for the application fee? This is way for the low income certification items. Then mail the application to the IRS. If you reside in any of these states, there are two units, one in Memphis and one in Holtzville. There is even a telephone number if you want to call. But this is the process. So you put all this information in a envelope, certified envelope with return address, certification, and application is sent, and you are ready. You just need to wait. It will take probably 30 days, 60 days, perhaps 90. The IRS will answer to your request. The first is they will send a letter to the CPA, to the enrolled agent, to the attorney, then pre-accepting the application, then or they can require some modifications, meaning that they say we are not going to accept this expense, and then your offer and compromise have changed for this amount. It will be minimum, and then the IRS officer that is in charge of the case will call to the office of the CPA, the attorney, or the enrolled agent, asking for information. That's like an interview, and then the letter for the acceptance will come. And remember, you need to stick to the schedule of payments. Do not go ahead. Do not go beyond. Do not pay twice. Stick to the payment schedule. This is the seminar, IRS Offer and Compromise. My name is Fulton Abraham Sanchez. I am a CPA. Our firm, FAS CPM Consultants, has designed this seminar with the objective of you resolve your IRS tax problems. You can contact us, support at fascpaconsultant.com. You can also review our website or call us. And we also have a YouTube channel. You can review our webinars there and the testimonials that we have. The objective of this webinar is that taxpayer know the truth. The true meaning of how to solve your IRS debt problems with the IRS. Thank you very much and stay tuned.